Give us a sense of what the industry has had to react to with the pandemic.
Yeah, David, thank you for having us, or having me. It's really quite something, and we've been talking about it this morning. I think we'll talk about it through the rest of this conference. With everything going on, COVID is really the thing that's front and center. Going back to March 13th, when people started testing going remote in the U.S. and ultimately did go remote, the industry has had to adopt to this. And I mentioned a couple of things that are going on. So we consistently survey our members on their working remote plans, returning to office plans. And what we found from, the spring to the summer, there was optimism of getting more and more people back in after being about 95% remote. Then you get to post-Labor Day, and that optimism's been tempered. Firms are reporting, 5 to 30% people in the office, primarily front office, sales and trading, but still a significant number working remote. And that seems to be the tenor going into the end of the year. I think firms are still waiting to see when they make the next phase change, and that could spread well into next year. And there are a number of factors with that. So the other thing I'd point out is we are releasing today an initial lessons learned report with our colleagues at Protiviti. And I just hit on a couple of points in there that firms are focusing on. Number one is health and wellness of their people is paramount to anything else that's going on. Number two is that firms need to and will need to undertake after action reports after this effort. Number three is to ensure that their operational resiliency with respect to third-party and global operations is sufficient. Number four is to invest and embrace in automation and digitization, which the industry has largely done and has proven to be quite beneficial. Number four is to continue to collaborate with regulators. There's been a tremendous amount of collaboration going back to the March-April timeframe and throughout the summer and into the fall. And now there's a lot of looking at what do we do in the post-pandemic period where we will see the need to move for dematerialization of securities, moving to things like e-delivery, building the processes where you will have some form of permanent working remote operations. In addition, building out the technology platform. And again, this industry is technologically built out and capable as any, but that's going to need to be even more, particularly with a continued emphasis on cyber. So these are the big things that firms are talking about. But at the same time, the industry has been quite resilient through this process, as you cover day to day, and that things work better than I think people thought. And we did a study at the request of the government back in 2007 on creating a playbook for pandemics, and this has worked better than I think people thought it would going back to then.
So, Ken, as you say, it's worked. I mean, your members have made it work, which is to their credit. The markets have continued, capital markets have continued. At the same time, as you talk about extending further the period of time when people are going to be working from home to a very large degree, what do you think you give up? Is there discussion about that in the conference? Because there's no such thing as a free lunch. You give up something every time you make an adjustment.
There's no question about it. And this is something both at this conference and executives that I talk to daily have talked about. I mean, there's the cultural aspect of teams working together. There's a collaborative effort. There's was one of my executives talked about is, cultural indoctrination of that firm's particular culture. And then onboarding, was just talking with Dana Emery of Dodge & Cox and this is something that comes up with many executives, onboarding new talent and how you bring that talent up and train them. Those things suffer in this environment. And so it has worked. It's not optimal. In the future, I think there will be more remote working than what we had going into this, but there's still a desire to get back to that collaborative framework.
Ken, you mentioned regulators and working closely with regulators. Let's talk about that for a minute. Looking forward, what are the regulatory issues that your industry faces? And let's be honest, would they be different under a President Biden than under a President Trump? President Trump has prided himself on deregulation. Has that been good for the industry?
Well, I think what has been good is to go back and look at this tremendous rule set that was put in place post-Dodd-Frank on top of an already tremendous rule set that's been in place for the industry for the last 70 plus years. And I think any regulator who was involved with that would acknowledge that it was at some point you had to go back and do a holistic review. And I think to a large extent that is what has been done. And there have been adjustments and calibrations around the edges of it that have made sense. And I think in this most recent environment where we went through this market dislocation, recession, we saw where in some cases, some of the capital and liquidity rules certainly got in the way of dealer banks being able to provide sufficient market making. And regulators, in fact, with a number of the various policy levers that they put in place, realized they had to make accommodations subsequently so that they would work as intended. So it's always worthwhile to go back and look at that. But I think the second thing that we're going to see is operational rules, supervisory rules around people working remote, moving away from physical securities even more so than we have, getting away from things like wet signatures, looking at things like e-delivery that I think regulators are going to have to deal with. And I don't think it necessarily matters in that sense whether it's a Trump administration or a Biden administration. These are things I think the policymakers, such as at the SEC, the CFTC, the Fed, elsewhere, recognize we have to transcend the regulatory framework with the technological advances and also what a post-pandemic world is going to look like.
Well, it's fascinating. So you're looking at an entirely different potential regulatory system in some ways, looking at in perpetuity, as you said, dematerializing securities. I heard you say that. But we're going to look at a different world for a lot of your members.
Well, I mean, to some extent, this is always an evolving thing. I mean, you think about dematerialization of securities processing, you just have to go back to Superstorm Sandy when DTCC's vaults were underwater. And even from that point forward, we had been moving in that transition. And frankly, you go back from when I was a banker a million years ago, the world changed a lot from paper to where we got to Superstorm Sandy. That evolution is going to continue. It's events like these that push it along.
One of the challenges that a lot of companies, not just in the securities industry, have had is preserving privacy and security as we go online, as we go virtual. What are the issues that have been raised for your industry in particular, and what has been done?
Well, this industry, has put, tremendous effort and resources into privacy and data protection even before the pandemic. And so we had a good platform going into this situation where everything was going remote. Everybody was on Zoom or whatever platform they might be using. But there's no question that heavy lean on communications technology, remoteness, creates potentially more risk. Something that this industry is well prepared for, but something that everyone's cognizant of, and we're going to have to continue to be well prepared for. And I think, David, one of the things that really came out of this was the efforts that this industry's put in place through its business continuity planning exercise and training, and likewise with cyber resiliency. But that's just going to be increasingly more important going forward.
Ken, finally, what does it do to the business model of your members? That is to say, is it a lot more money when you talk about investing in technology? You talk about a lot of things you're talking about. It sounds like you have increased costs.
Well, I think the firms feel like there's good payoff on that cost because we're an increasingly technological world as well, right? So it's not just the platforms, but it's also the people and the clients who are using technology. So I think firms have shown where they made the investment in technology, that's paid off, whether it's in operational resiliency, data and privacy protection, or customer engagement. And I think that's just going to continue.